everyone, and welcome to another deep dive.
Ready to jump in.
All right. Today we're tackling options trading systems.
Which is always
a fun one.
a popular topic.
Now, we've got a white paper here that actually compares 8 different systems.
Yeah, we're going to break down all those systems, look at their quirks, what makes them risky or not so risky, and ultimately, which kind of trader each system might be a good fit for.
So, if you are thinking about getting into options trading, or even if you've been doing it for a while and you're like, I want to try something new.
Exactly.
This is going to be super valuable for you.
Absolutely.
So the source material breaks down these systems into 3 risk categories.
Yeah, the classic conservative, moderate, aggressive breakdown.
Right. And it's so interesting because even within each category, you've got such variety.
Absolutely.
So under conservative, we've got OneSymbol, slow and steady, and simple 30.
And these are great for beginners or folks who are really just looking to dip their toes in the water.
Yeah, I actually like that visual of dipping your toes in the water because some of these systems, like OneSymbol, is literally focused on just trading a single stock.
Right. It's the one stock wonder.
Yeah. So is that really conservative?
Yeah.
Or is it just super niche?
It could be both.
Yeah.
You know, on the one hand, you're really limiting your exposure, right? You're not spreading yourself too thin.
Yeah.
But you're also putting a lot of faith in just that one company.
Yeah.
So it's simple, definitely capital preservation focused, probably good for beginners, but maybe not the most exciting strategy.
And you mentioned capital preservation, and I think that's a big part of what makes these conservative systems appealing because there's that 40% profit sharing feature in OneSymbol.
Exactly. So 40% of any profit you make is automatically locked in. So even if the trade goes south later on, you've already banked some gains.
That's pretty cool, especially if you're risk averse, right? But speaking of conservative systems, let's talk about slow and steady because this one uses something called 2-lot entry. And I have to admit, I'm not entirely sure what that means.
So a lot is just a group of 100 shares. So a 2-lot entry means you're buying options contracts that represent 200 shares of the underlying stock.
Right. So you're starting with a bigger position.
Yeah, it's like saying, I'm feeling confident about this trade, so I'm going to put a bit more skin in the game. But remember, slow and steady lives up to its name. It aims for gradual growth, not those overnight home runs.
This is a little bit more controlled risk, but maybe you're getting a little more bang for your buck.
Possibly.
Because you're starting with more.
Yeah, you're not putting all your eggs in one basket, but you're putting a few more in than you would with a single lot entry.
Makes sense now. How does that compare to Simple 30?
Well, Simple 30 is interesting because it actually uses 2 separate accounts. Yeah. One is for trading and one is for holding reserve capital. So it's like having a safety net.
So you're kind of partitioning your funds? Okay, so it's even more conservative in a way because you've got this reserve.
Yeah, it's like saying, I'm only going to play with this much money and the rest is off limits. Helps you avoid those emotional decisions that can lead to bigger losses.
And both of those systems, Simple 30 and Slow and Steady, have that 30-40% profit target, which seems very specific.
Yeah, why that range? It could be based on historical data or back testing, but it's interesting that they both landed on that sweet spot.
Right, so even within that conservative category, we've got 3 really distinct flavors.
Each with its own quirks.
Exactly.
Now, are you ready to step it up a notch?
I think so.
Let's move into the moderate risk zone.
All right.
And here we have Sleek One and the batch method.
So tell me about Sleek One, because the name itself sounds kind of intriguing.
Sleek One is all about multi-lot trading across 3 different symbols. So you're diversifying a bit more, but you're also increasing the complexity.
Okay, so maybe not for a brand new trader.
Probably not. And the $10,000 minimum account balance kind of reinforces that.
Right.
This system is for someone who's comfortable juggling a bit more, has some capital to work with. It's aiming for that balance between risk and reward.
Makes sense.
But we'll get into the specifics of what that actually looks like in practice.
All right, now I'm really curious about the batch method because the name makes me think of...
Baking.
I was going to say cookies.
Yeah, a lot of people say that. It's not about baking, but it is about dividing your capital strategically. You're splitting your funds into separate batches, and each trade only gets a certain percentage of that batch.
So you're not putting all your eggs in one basket?
Exactly. It's all about controlling your exposure and promoting consistency.
And that brings up an interesting point because we've been talking about these systems, and they all require capital, right? So how does your account size factor into choosing the right system?
Account size is huge.
Yeah.
You know, we already saw Sleek One requiring at least $10,000.
Right.
But even beyond the minimums, some systems just work better with a bigger pool of capital.
Yeah, like if you only have a small account, you might be eaten alive by fees or commissions, especially if you're making a lot of trades.
Exactly.
So meeting the minimum doesn't necessarily mean it's going to be profitable.
Right. You really have to think about what's optimal for each system, not just the bare minimum.
Okay, now speaking of the batch method, this one also throws in something called a multiplier account.
That's where things get interesting.
That's way more aggressive.
It is. Think of it like a booster engine for your trading.
Okay.
It lets you trade more aggressively with a portion of your profits, potentially amplifying your gains.
So you're taking some of your winnings?
Yeah, and putting them into a separate account specifically for higher risk, higher reward trades.
So even within that moderate category, you've got this whole spectrum of approaches.
You got it.
Yeah, which really highlights how important it is to understand your own risk tolerance, right?
Absolutely.
Like how comfortable are you with potential losses?
And how much experience do you have?
Yeah, because that's a big factor too.
Absolutely.
But before we get ahead of ourselves, let's take a quick break, and when we come back, we'll dive into the aggressive options.
The fun stuff.
I know, I'm a little bit nervous.
We'll be right back.
See you in a flash.
Welcome back, folks.
All right.
Ready to get a little more aggressive?
I think so. A little bit intimidated. But
Yeah, these names are a little
I know.
intense.
A little bit intense. We've got Speedo, Play 100, and 3 Max.
Yeah, you can almost hear the engine revving.
Yeah.
Just from the names.
Yeah, buckle up.
But let's not get ahead of ourselves. Aggressive doesn't necessarily mean bad or irresponsible.
Right.
It just means these systems are designed for traders who are comfortable with higher volatility, potentially larger drawdowns, but they're looking for faster growth.
So it's all about aligning your system with your personality, your risk tolerance.
Exactly.
So let's start with Speedo.
Yeah, Speedo, as the name suggests, is all about speed, right?
Wow.
Rapid account growth. And it uses this thing called a modified profit cycle.
Okay, I remember seeing that.
Which means you're reinvesting your profits more quickly.
So you're compounding gains more aggressively.
Exactly. You're striking while the iron is hot.
But does that also mean that you could compound losses more quickly?
Well, yeah, that's the flip side, right?
Yeah.
Higher risk, higher reward.
So it's like you're accelerating the feedback loop,
Exactly.
both the good and the bad.
Yeah, you got to be ready for a wild ride with this one.
Okay, and I remember both Speedo and Play 100 use this modified profit cycle. Is there a reason why that seems to be a recurring theme in these aggressive systems?
Maybe it's because aggressive traders are just naturally drawn to systems that capitalize on momentum, right?
Yeah.
Quick gains, quick reinvestment, keep the ball rolling.
It makes sense.
But let's not forget about the risks. Speedo also involves multi-lots.
Right.
And it has a specific minimum balance.
Right, which again signals that this is for a certain type of trader.
Not for the faint of heart.
Yeah, definitely not someone brand new.
No, you got to have some experience under your belt, some capital to work with, and the mental fortitude to handle those rapid swings.
Yeah, because it can be really stressful.
Absolutely, especially with these aggressive systems.
Yeah, and you're seeing those big swings.
Yeah.
It's like riding a roller coaster.
It is.
Okay, so now let's talk about Play 100 because the name is kind of deceiving.
Yeah.
It allows you to trade up to $100 per trade.
Yeah. It sounds almost casual.
Right, especially compared to these other systems we've been talking about.
Right, like multi-lot strategies where you could be risking thousands.
Yeah, so what's the deal with Play 100?
Well, even though the dollar amount seems small, the source material actually categorizes this as high risk, high reward.
So it's not about the amount of money per trade.
It's about the types of trades you're making.
Maybe they're just inherently riskier.
Exactly.
Like aiming for those big percentage gains rather than slow and steady growth.
It could be that they're focused on options contracts with higher leverage, maybe shorter time frames, which would naturally amplify both the potential profits and losses.
Okay, so it's not about playing it safe, it's about playing strategically,
Right.
even if you're only using $100.
Exactly.
And of course, it also uses that modified profit cycle.
Yep. Got to keep that momentum going.
Okay, so that's Play 100, and finally we have 3 Max.
The big leagues.
Yeah, the highest minimum balance.
Yep. Serious players only.
And this mysterious protection lot.
I know that sounds intriguing.
Yeah, what is that?
Well, it's likely designed to mitigate potential losses.
So even though it's in the aggressive category, it's still incorporating some risk management.
Exactly, because even when you're being aggressive, you still need to be smart about it.
You don't want to just go all in and hope for the best.
Nope.
So this protection lot is like a safety net almost.
It's like a buffer, a way to soften the blow if a trade goes against you.
I like that. And then there's also that 50% profit withdrawal rule with 3Max.
Yeah, you're automatically taking some chips off the table whenever you have a winning trade.
So you're locking in those profits.
Exactly, which is especially important in a high-risk environment.
Because things can change so quickly.
Yeah, you never know when the tide might turn.
All right, so we've covered a lot of ground here, from conservative to aggressive.
Yeah, we've seen a whole spectrum of systems.
But how does this all come together for someone who's actually trying to choose the right system for themselves?
That's the key question, isn't it? And it's not just about understanding how the systems work. It's about understanding yourself as a trader.
Right, like what are your strengths, your weaknesses, your goals?
Absolutely.
And it goes beyond just risk tolerance and experience level, right?
Yeah, we've got to dig a little deeper.
Yeah.
Think about your trading style, even your personality.
Yeah, because some people thrive in those fast-paced,
Yeah.
high-pressure environments.
Absolutely.
Whereas others prefer a more like methodical, long-term approach.
Right. If you're the kind of person who gets energized by constantly monitoring the markets, making multiple trades a day, then maybe those aggressive systems like Speedo or Play 100 are a good fit.
But if you're more of a set it and forget it type,
Yeah.
maybe get a little stressed by those constant fluctuations.
Then the conservative systems might be more your speed.
But let's be realistic, even the more passive systems still require some level of monitoring, adjustment.
It's not completely hands-off.
Options trading is not a passive activity.
Right. And that brings up another important factor: time commitment.
Ooh, yeah, we can't sugarcoat it.
Yeah.
Some of these systems, especially the more complex ones.
They're going to demand more of your time and energy.
So think about everything involved: the research, the analysis,
The trade execution.
the ongoing management,
And journaling.
all of it.
Yeah. And the mental and emotional energy involved.
Right, because trading can be really stressful,
Oh, yeah.
especially when you're dealing with these high-risk strategies.
You got to be honest with yourself about how much you can handle without burning out.
Exactly. If you're juggling a full-time job, family, other commitments, you need to choose a system that fits into your life.
That's right.
And it's not just about time, it's also about your trading style. Like, are you a deep dive researcher?
Yeah. Do you love poring over company financials?
Or do you prefer relying on technical indicators and charts?
It all comes down to finding that perfect fit between the system, the strategy, and your own psychology as a trader.
Right. It's like all these elements need to be in sync
Exactly.
for you to truly succeed.
It's like a dance.
I was just thinking that, yeah.
You got to find a partner who can move with you.
You don't want to be stepping on each other's toes the whole time.
Exactly. If you're constantly battling your system, you're not going to enjoy it, and you're probably not going to be successful.
So to wrap up this part of our deep dive, we've now got a really good understanding of how these systems work.
Yeah, from risk profiles to trading styles.
But there's one more layer we need to explore.
And that's the underlying philosophy of each system.
Because it's not just about the mechanics, right?
It's about the mindset.
It's about the belief system.
Exactly.
So we'll be back in a jiffy to delve into that fascinating topic. We're back and ready to get philosophical.
I like it.
Because we've talked about the mechanics of these options trading systems.
Yeah.
But now I want to dig into the underlying strategies.
Why behind the what?
Exactly, because it's not just about the nuts and bolts, right?
No, each system has its own philosophy, its own way of looking at the market and making decisions.
Yeah, and I think understanding that can help someone decide
Absolutely.
which system really resonates with their own
Beliefs,
Yeah.
their own approach.
So let's take OneSymbol, for example.
Okay.
What kind of trader personality would be drawn to that system?
Someone who really believes in thoroughly understanding a single company before making a move.
Okay.
They're not chasing trends. They're not jumping on bandwagons.
They're like, I've done my research.
Yeah.
I believe in this company.
They're the Warren Buffetts of options trading.
Yeah. And I'm willing to write it out, even if it means missing out on other opportunities.
Right. They're comfortable with that concentrated focus,
Yeah.
that deep understanding of a single stock.
Now, contrast that with the batch method.
Okay.
You're spreading your capital across multiple trades.
Right. Much more methodical, maybe even a bit risk averse.
Yeah.
They're not looking for those explosive games.
Right. They just want consistent, controlled growth.
Steady as she goes.
But then you throw in that multiplier account.
Right. That's where things get a little spicy.
It's like they're saying, okay, I'm being cautious
Yeah.
with most of my capital,
The bulk of it.
but I'm willing to set aside a portion for those more aggressive plays.
Exactly. It's like dipping your toes into the fast lane,
I like that analogy.
while still keeping the majority of your portfolio in the slow and steady lane.
Okay, now let's talk about Speedo and Play 100.
Okay.
Because both of those use that modified profit cycle which to me suggests a belief in maximizing gains quickly.
Right. Strike while the iron is hot. Capitalize on that momentum.
It's for those traders who thrive in fast-paced environments.
Yeah.
They love making quick decisions.
Yeah, they see an opportunity, they jump on it.
And they want to see those gains compound rapidly.
Absolutely.
But of course, you got to have a high level of discipline.
Oh, yeah.
And risk management.
Because those losses can compound just as quickly.
Right. It's a double-edged sword.
It is. You got to be ready for that roller coaster.
This is making me realize it's not just about the mechanics of a system.
It's about the mindset.
Yeah, the mindset it encourages.
Absolutely.
So it's really about choosing a system that aligns with your natural tendencies and your comfort level with risk.
You got to find that system that feels right for you, that you can trust.
It's like finding a dance partner. You need to be in sync.
I love that analogy.
You got to enjoy the rhythm.
If you're constantly stepping on each other's toes, it's not going to be a fun dance. Yeah.
And it goes beyond just personality and risk tolerance, right?
Yeah, think about your research style.
Okay.
Are you someone who loves digging into company financials,
Yeah.
reading analyst reports,
Or do you prefer a more technical approach?
charts, indicators, that kind of thing?
So if you're a fundamental analyst at heart, maybe OneSymbol with that single stock focus makes sense.
Right.
But if you're a technical trader, maybe Sleek One with its multi-lot, multi-symbol approach is more appealing.
It's all about finding that perfect fit.
And the beauty is, as you gain experience and your trading style evolves, you might find yourself gravitating towards different systems.
Absolutely.
Or even developing your own unique approach.
That's the exciting part. It's an ongoing journey
Yeah.
of learning, adapting, refining your strategies.
So to wrap up our deep dive, you've now got a solid overview of these 8 different systems.
From conservative to aggressive.
We've talked about the mechanics, the underlying philosophies.
The trader profiles they align with.
But this is just the beginning.
It is.
There's so much more to learn.
Absolutely. There are books, courses, online resources galore.
So do your research, experiment, and most importantly, never stop learning.
That's the key.
This deep dive has given us a fantastic framework.
A solid foundation.
But now it's up to you, the listener, to take the next step.
Go explore, find your perfect trading system.
Then embark on your own exciting options trading journey.